Friday, September 22nd, market analysis, Stan Ehrlich. I start out with the stock market indexes, go to futures and sometimes sectors and forex and even crypto. But today we're going to concentrate, because it's a very big deal, on the head and shoulder top that is formed, past tense, on the stock market indexes, taking the last 3 months to do so. The last shoulder in this formation took about 3 weeks to develop, and by itself has been, because it already worked, a small head and shoulder top formation, which I detailed at the time. For the S&P 500, we on September 15th gapped down across the neckline of the small 3-week pattern and broke out with a classic downside gap. Just exactly the way it looks in the books, so to speak. The timing was great. The shoulders were about the right level considering the angle of the neckline. And again, this little 3-week pattern, starting with a rally high on August 24th, was by itself the shoulder of the larger pattern, which has a high for the top of the rally from October 13th of 2022's bottom all the way to July 27th of 2023, close to a year. We have a buy signal on October 13th last year. A little bit more. Just fantastic. The ER system, ER signal, automated trading strategy, which is available for Ninja and TradeStation. We have the top of the market producing an ER sell signal so far, the top of the market, to the exact day, of course, July 27, 23, in an area of resistance, no less, historically. And we talked about it getting overbought before it happened, and that it might, and it did, and wow. I had no idea it was going to develop into another head and shoulder top, taking about 3 months to do so, and we're on our way down. As of yesterday was the major downside breakout, which is breaking below the neckline, this red line I just put the little white dots on, called handles. And we're not supposed to be going above the line or closing, especially closing above the line. But there's a little problem with this particular formation. We have a small gap, which mostly would be considered a breakaway gap to the downside on the bigger pattern, very similar to the small gap that we had only a few days ago, breaking away from the small 3-week head and shoulder. What an amazing duplication of situations, different time frames, same formations, one part of another bigger one. Okay, so for the bigger one, our downside objective, and we're now trading at the moment at 433.5-ish, is 406. So you can see about a little less than 30 points lower is what I'm expecting. And also I'm going to be showing you the October low history here in a little bit. So I think it's going to go down into approximately the middle of October. Now, that has nothing to do with the fact that last year it was dead on the middle, the 13th pretty much of the middle of October. Usually it's in October, period. Could be the first or last day. Nevertheless, today is September 22nd, and all we need to do is go down for about 3 to 4 weeks, and I'll be right on time. Hopefully getting oversold, blah, 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 about a bottom when it happens, which is also a 50% correction of the October 13th low of 22 to the high we saw just a couple of months ago in July. A Fibonacci retracement, 50% retracement, not unusual, and a major, if it works correctly, buying opportunity for investor types that would hold for significant period of time, and maybe new historical highs by the end of the year. Let's go into detail. I'm digressing. So today's rally high is dead on. I looked very closely at this, and I think it's 6 ticks, hundredths, minimum ticks below the actual line for today. So I don't want to see another new high for the day. I certainly don't want to close above that. But the problem again is that gap. And that gap starts at 435 and a few ticks and is finished closing at 438 and a third. So it's not teeny weeny. You can get 36 up to two and a quarter points is not huge, but nevertheless, that's how big it is. So are we going to rally back up to 38 and a quarter or so and close the gap or not? If it does, I have to have it turned down almost the same day. I mean, immediately, no time spent whatsoever above the neckline. We've seen examples. I've seen many examples where it did go a little above the neckline for a day or two and then work correctly for weeks to come. So this is a possible problem. So far, it's just perfect. I mean, I can't believe it. The rally high today was stopped right at the damn neckline. Okay, so from what are we going to do here? Go down, if that's it. Again, on the way down, there's going to be some bounces. It's going to take a few weeks, and I'm hoping it's going to get to 406 or lower, and in the middle of October, and then just plain turn around big time. Big time. This same formation, by the way, is in, of course, let me get to that chart. I am not getting to the right chart. The DIA, last October lows, bottom left. This is my custom relative strength index, and I learned RSI from Wells Wilder himself. And I like the numbers that I'm using. They seem to work for me a lot better than Wells's. He developed his in 68-ish. So that's quite a ways back. All right. We're now oversold also in the DIA today. It was almost yesterday, but today does the job. So the oversold condition on a downside breakout of a pattern is not that unusual. It has to go down somewhat significantly in order to break out bearishly. So seeing oversold conditions is not that bad. I just don't want to turn around in any significant amount for any length of time, point blank. Or it can, be oversold another 2 or 3 days more. So by the end of today, and we're only up 2 points right now in the spider, a half a point in the DIA, and 3 1/3 in the Qs, you'll see in a minute if there's any problem with that. But there's no problem with, so far, the DIA. It is working great. It has not touched and does not need to touch the neckline. The amount of rally we've seen today would suffice. It's okay. Or maybe touch the neckline. And the minimum downside objective for the DIA is 324-ish. Don't hold me to the exact ticks now. So I love what's happening so far. It's been working great for weeks and weeks in terms of expectations, trying to detail what's happening on a day-to-day basis, etc. Let's take a look at the Qs. And you guys know you can speed up, stop, look back, and so on and so forth. That don't need to, which I just did tell you anyway. The Qs haven't broken out yet of the head and shoulder top. They're coming down to the neckline and getting oversold for the last couple of days. And they have a gap to close above the market as well. So are we going to go back up and close the gap before the downside breakout? Well, there's nothing wrong with that. And it won't change my opinion at all. In fact, that's a damn good place to consider selling short when a gap is closed. And that would be 364.33, give or take. So maybe today's high looks like it's a tiny bit above yesterday's high. So maybe a little bit of the gap is being closed, but nothing significant. And that is correct. We are in a little bit of a support area. So bouncing out of that and an oversold condition to go up and close the gap and turn back down again sounds very possible. Next is the Russell 2000. And there's also a gap from just a couple of days ago. Now, it's only up on the day 34 ticks, hardly anything. So it's acting very weak relative to the other indexes, Qs being the firmest at the moment. And that trades off almost every day, which one's stronger or weaker, relatively speaking. So the closing of the gap in the Russell is not out of the question whatsoever. It broke out to the downside big time on September 20th, only a few days ago, a couple days ago. That's Wednesday. And followed through hugely yesterday again. So closing the gap is no big deal. In fact, I kind of expected. I would have to say that. And we almost closed the gap from a long time ago, 601. So I think rallying to close the gap comes first and then down to new low ground. But the problem is it's going to violate the neckline on some patterns like the spider if that happens. But there's that gap, I remind you. And we'll take a quick peek. I know I'm spending a time here. It's very important these days, this pattern. With the E-mini, it's essentially the same thing. Although right now we are slightly above the neckline. Yesterday is the first day. It broke below the neckline. So this is acting a little bit fishy. But again, I already gave a slight apologies for the rallying above the neckline, but I don't want it to do it very much, that's for sure. And for very long, that's for sure. So this gets tricky right in here. What about the NASDAQ futures contract? It is not breaking out yet of the head and shoulder. So we have oversold conditions and a little bit of support, and a bounce would be okay without damaging the bigger pattern. That's it. Futures markets. E-mini real quick, you just saw that a moment ago, but it's the futures very popular, obviously, along with being an index. So I show it again. The downside objective for the E-mini is 4110, I think I say, for 4,110. The NASDAQ looks the same, but on purpose, I didn't draw in the shoulders, etc., just the neckline faintly, and it's not breaking out yet. Bonds got oversold yesterday and again today with a slightly lower low. I think it's easily going to come back to about 18 and maybe turn down at that point. Now, there's a good possibility that it could be 19 and maybe even a little bit higher. I would call probably, 120. Excuse me. Interesting. It's even points usually as the highest rally in the next week and then down. I'm bearish. New lows, new low closes. I can't help it. There was a previous bullish pattern that did not work out correctly and no signals were involved. Just an expectation that failed. And now it's just flat out bearish, but oversold means it's probably going to rally a little. Trend is down, obviously. Next is 10-year notes. Everything I said about the bonds is the same about the 10 years, except the prices are different. Crude oil, has it topped out 4 days ago? Well, I have to say, I think there's a good chance of that, but I'm not sure enough to scream bloody murder, get short somehow. But I'm very tempted. If we were to get below yesterday's low today and stay lower on the day than the previous close, I would have a bearish red sell signal and screaming bloody murder topped out. Pardon me. Damn, a little cough. So there's a maybe, but it looks like it is starting to roll over. How much so? Down to 82.5, the support area. The trend is up. The bottom is in. This is trending higher, except it got way overbought, so it deserves a correction in a bull trend. Next, heating oil. Pretty much the same comments and already started to do it. Yesterday was a bit tricky because that rally, but today is acting a little bit more bearish, and I'm expecting it to break below the lows of the last week or so very quickly, and then work its way back down into a little bit of a support area, this red zone, which starts at 3.0214-ish. So mildly bearish short term, but the trend is up and I don't see any major highs yet, or a major top, that is. Next, we got natural gas, boring, slow sideways grind between a rock and a hard spot. Next, gold. We had a buy signal 2 days ago, but it didn't work. And buy signals are sometimes part of a bottoming out process. We already got our lowest low just perfect on a buy signal on August 24th. We also had a higher high, I meant a high in the market on a rally on July 20th, perfectly with a sell signal, and some very, very good other sell signals and buy signals this year. So gold has been really good on the average, but that signal didn't work. But are we still bottoming out is the question. I don't have an answer. I want to wait. Start closing above 1970 would start to turn me significantly more bullish. And I think there's a good chance of that. And then, of course, we're going to start to make new highs and go all the way up to 2000, say 43 or so. But that hasn't happened. On the other hand, I think if we're starting to get a close below 1918, that would cause me to believe that the lows are going to start to be lower again. Next chart. Silver had a buy signal that is working today, but obviously it dropped below the protective sell stop on yesterday's markets. So I had a day trade loss, not very big, fairly small, from at maximum between 23,633 and out at 23,360. So that was it. But it could have been smaller. In fact, it was smaller. We would have gotten long at 2350, 542 on the opening below the bid. So yeah, it was a smaller loss. So I might miss this rally because the system actually didn't catch it the way I love it. That was a great sell signal. That was a great buy signal. This was a little premature. This one was a great sell signal. These two highs are the two highs of a double top. You can't get better than that. The low of the move for a very big decline and a very big rally. We got March 10th. Great. Precious metals have been really good this year. Next chart. Platinum. Got the bottom approximately of the break. We got the high of the rally before that. We got almost the exact low before that. And that's just in the last 2 months. Every single turn so far of consequence. We're going to go up, I think, to close this gap. And I've been talking about that since the bullish engulfing, which was on September 12th. So I'm liking this very much. But can we make new highs for the whole trend lately and get up to, say, 1,000? That's not out of the question. Let's see what happens when we close this gap first. Next chart, high-grade copper. Trend is down, obviously. We got a great sell signal with ER signals on September 1st and a buy signal on August 17th, a top and bottom. Now we have a new low in support and not quite oversold. It came so close to being oversold, it's ridiculous. A third of a point. So it's bouncing like I mentioned yesterday. I'm sure I did, and not very much. So I'm looking for maybe a little bit more of a bounce, but the trend is your friend and the trend is down. And I have to be turning bearish here quickly, soon. I don't see any bottom of any consequence yet. Next chart is oversold conditions in over in a support area for the last 2 days, yesterday and today, for soybeans. And this support area I've talked about innumerable times for months. Are we going to bottom out again, just like we did on August 8th and 7, with a buy signal in the process of bottoming out? But again, it didn't work, kind of like silver, quite right. We got the high almost exactly and a good sell signal. That was premature. This looks like it's trying to turn up in support. Trying to justify getting, if we get above yesterday's high, which doesn't look particularly likely, then I will turn very, very friendly very quickly. Next chart. Soybean oil is having today another bullish engulfing. So this is a brand new today, first day. ER1 is long, approximately where we are right this moment. And obviously, I want it to go up from here because we have started a new long position. We will know what the bid will be for the next few days as of the close. It could be the same price we have pegged right now 59.12. I think that's 59.12. Yeah, 12. And what our protective stop is 58.25. So I used to be a broker for 30 plus years and don't have that license anymore. As a citizen, so to speak, I can say this: it's my system. It's automatically going along right where we are now. And that risk I've already described to you. Up to you whether you want to do it or not. Next chart. Soybean meal coming close to support. I thought it might test the 379 level. I still do. Next chart. Corn. Slow grinding long-term bear market like wheat is starting, well, a long time ago, but perpetuating, I should say. I don't think any rally is going to go too far. I don't think it's going to last too long, and I'm looking for new lows for the trend, and they could be substantially lower. I don't have an objective at this time. Next, I don't necessarily like objectives in the first place, unless a pattern tells me so. Wheat, like corn is going to do, wheat has been doing, and I think it's going to continue. Next, cattle. I'm trying to define a top here. It doesn't look like it wants to turn around. It's very, very overbought and is starting to show some signs of turning, but I think it's still a little premature. So I'm still looking for a reason to go short. Next, I wouldn't buy it, cattle, because it's too damn overbought and could turn around viciously and quickly overnight. Hogs here tested resistance just 2 days ago, stopped cold turkey, didn't quite get overbought, and turned down to the support level that I mentioned, and now is a little bit below it. So, not being anywhere near oversold and still having more support at lower levels around 70, I think we're going to go down to about 70. Next chart, OJ. It had a bearish engulfing ER sell signal officially yesterday after being overbought for a few days before that, and has given me, that worked for a day or two, sell signals in the past. That one probably didn't make any money. It was probably a small loss on that sell signal on August 24th. But that was a small profit for a couple of days on August 31st. Will this make money? I can tell you, and I've checked it, the high of the day today is about a tick below the stop. It didn't get hit. Our stop is 345.85, and today's rally high is 345.70. Sorry, 3 ticks below the stop. Whew. So it's still a small loss on ER3. We went short about the red dot, 341, call it 20, and right now 342.70-ish. I hope it closes below the red dot, so it's a profit on the close. Obviously, the stop is the stop. If it starts to make new lows, our stop will automatically start to come down. ER1 is still short from yesterday because it didn't get stopped out. We'll see how that pans out. Brand new trade, and another one that you might be interested in next, cocoa. Looks like it's going to make new lows real soon. Maybe today, probably early next week. Got way overbought, didn't have an official sell signal, but when we started to make new highs for the trend, there was no follow through except for a little bit for 2 or 3 days, and then all of a sudden everything fell apart. So that's not particularly bullish. It looks like some sort of formation top may be forming or formed, although it's not a recognizable formation per se. It was a double top until we banged through it for 3 days. Next chart, I'm bearish on cocoa. Coffee, about to test the bottom, as I talked about, of the broad support area, and we could be getting to oversold conditions if that happens in the next day or two, or maybe today. The overbought condition near the high of the resistance did stop it earlier this week, so no surprise, we're all the way back down here like I talked about. So let's see what it does if it gets back to 147.1020. Next chart is sugar. Don't really have a great comment here, except there's some sort of a top maybe building, and I'm premature. Don't like what I see. I haven't got anything to work with. Next chart. Cotton the rag has an outside down day bearish engulfing. Now, it's not overbought and nowhere near it, but the bearish engulfing means, from a Chinese candlestick interpretation point of view, that prices are supposed to go down from here, which I agree with. I think it's going to go down to 83.20-ish, 30, and maybe even lower than that soon, next week. Next is the E-mini, where we started. Thanks very much. Oh, October close. Let's take a look at that. So, the head and shoulder top in the stock market indexes, I'm showing specifically SPY, has started and is basically working. I am expecting to see levels to go down and bounce around a little bit on the way down. But remember, bear moves go down faster than bull moves go up. I didn't say a bear market, but all that's true as well. And I do not mean to imply this is the beginning of a bear market. I'm specifically looking for about 406, 407, and right around October 16th to 17th. That would be the middle of my circle here. If I get anywhere near the middle of this circle, the closer the better on that date and price, I'm going to be elated. Thank you very much. You guys have a great weekend. See you Monday.